Hey everyone, Dan here. Today is Thursday, May 6th, and we are currently in Power Hour. Today we're going to take a look at Alibaba and at the macro and micro charts for anyone who is doing longer term investing or longer term swing trades. That'll be the macro chart, and then for anyone who's doing day trading or shorter swing trades, that'll be the micro chart. As always, if you enjoy these videos, please hit the like and subscribe button. It helps a lot. And let's get right into it. So Alibaba in the last 3 months has taken quite a beating, as I'm sure you know. A couple of interesting things that stand out immediately to me. Alibaba, and I've talked about this before when charting Baba. I might have only done like one video on it previously, but it's definitely something that I've looked at for quite a while. But Alibaba is, in my opinion, a confirmed frequent gap filler. And so these gaps that I'm pointing out right now are the ones that stand out to me. Obviously, this monstrosity here, which subsumes that smaller one that I had noted. But all of these gaps in this range here, like these have all been filled now, including this enormous one, as this stretched down here, I guess that was just today, and filled the bottom of this gap. It may sort of need to futz around there a little bit longer in order to completely fill it, depending on how heavy the volume was at that point. It appears down here that the volume, although that was sort of like mid to late day, was actually pretty high, but I'm not looking at it incredibly closely. So, that being said, I think that we are sort of all clear to head back upward. My target would be essentially to fill this gap that would bring us up to about 262, somewhere in that area. So that's going to be my most obvious upper price target for the time being. 262, that'll give us a nice percentage bump up, and I'm sure would be a welcome relief for any weary Baba holders. This should give us pretty good support. The stock price may get dragged down a little bit because that's commonly what happens when something comes down to fill a gap, is that selling pressure, the momentum that's created on the bearish end of things by coming down to fill a gap like this, can sometimes drag it down even further. So I'm not saying that it would, but if it does, I would look for a bounce around 221. And if it can't hold 221 and it does get down underneath 217, that could be a pretty bad sign, in my opinion. On the nearer term price target area, this would be our first level of support that we want. This is a really good area. Look at all of this support here, previous resistance here, previous support here, previous support here, previous support here. That's a really, really strong zone. So if it can get support there to begin with, then it will have some additional stickiness, probably getting itself basically to 230. It'll probably be a little bit sticky. And then, I'd really look at this area, 233. So I don't have a position in Baba right now, but the way that I would look at this chart if I did, or if I do end up taking a position, is I'd be playing it sort of like one of two ways. One, either I'm really confident both in Alibaba as a company, but also in sort of like what the chart is saying and the gap fill potential, and that it would come up and fill that 262. And so that would just be my upper price target. So I try to find a good dip buy, and then just that's my target, and I'm going for that. And I'm going to sort of set a stop loss and otherwise try to ride some bullish price activity. The other thing is, you can sort of have that as an upper limit in mind. Let me get a sip of water here. Okay, let's see if that does the trick. You could sort of have that as an upper limit in mind, or an upper price targets, and then maybe trim, select out a couple of price targets here to trim. So maybe if you get a dip buy at about this 225 zone, maybe you say, okay, my first trim will be at, say, 239 or 240. I'll take some profit off the table there so that I lock some in, and then maybe I'll take another chunk off the table at 250 just because it's a nice easy number to remember, and then maybe I'll sell out my position around 260, 262, and that'll be my sort of like way to play and make money and lock in profit along the way with Baba. The other advantage, if I've never said this before, to locking in profits along the way is it then frees up capital to go play other stocks that are making moves at that point. So all of your capital is not tied up for the entire run of Baba if you don't want it to be. But you have to decide for yourself based on your risk and your goals for any of these positions. Just make your best decisions that way. But this is what I look for. Just keep in mind, especially if it does fall through this cautionary in this sort of stop loss area, just because Baba has frequently filled gaps in the past, and I don't even know that there's a gap on here that it didn't fill, but it doesn't mean that it absolutely has to fill all gaps. Even stocks that are great gap fillers like Mara, for example, there are certainly gaps that they leave unfilled. It's just a matter of, does it mostly fill gaps, or does it completely ignore the gaps and they play no part in the stock's movement? And if something does frequently fill gaps, then that sort of like gives us a North Star to follow. But just know, just like whenever you build a channel, that channel will always break. The gap filling sometimes will not come through. And that's because nothing does anything 100% of the time. There's always outliers. So just keep that in mind and don't ignore other responsible things that you see in the chart just because this gap is up here. Do your due diligence, do your own work, and kind of make your decisions based on what's happening. But that's what I would say for now. So pause this here if you want to jot anything down or study this a little bit more. I'm going to erase it, and we're going to look at the indicators. And first, we're going to go ahead and look at the MAs. So they're bunching up nicely here. Right now, they're definitely turning bearish from this recent drop down. But that 12 is mighty close to the 20. So if it can sort of hit a bounce after filling this gap, that we talked about here, that would be a very quick and easy crossover, the 12 getting over the 20, and would then pave the way, obviously, to cross 50 and the 180. But right now I would look to sort of see how the distance between the 12 and the 20 is playing out. Are they getting more distance and still moving down? That probably means that we're going to head to the cautionary and potentially the stop loss zones. Or is there crossover happening? And that might give us our first initial push up toward 230. On the RSI front, it is very, very low. And, Baba does do a good job of being oversold and then coming up to overbought and putting in sort of nice logical price progression through that range. It didn't quite reach overbought here. In this range it was 228 and only got up to about 236. So an $8 move, but on a stock that's prices this high, that percentage gain is not phenomenal. Much, much better to have been in this situation and caught the dip here and then rode it up to here. But that sort of leads me to believe, if you look at this dip here and compare it to this dip here, it made a push up and nearly came into overbought territory before cooling off and coming down almost to oversold again. So now what's happened? It comes up almost to overbought territory and then comes down to oversold or near oversold again. So is it going to repeat this structure where it was oversold, good push up, but then basically retests and then goes to a really good overbought price? It could be doing that again. It's looking very, very similar to me. So I would look for potentially catching one of these, setting yourself a reasonable risk to reward stop loss in case it turns against us, and seeing if you can ride it up over the 70 RSI mark. On the MACD, signal and MACD line are bunching up together, basically all of the momentum here is dying down. So all of the bearish dying down, all of the bullish dying down. So it's sort of like waiting for a strong crossover to happen like you saw here, that really strong crossover, and then another sharp extended cross down here that dragged it back down. So if we get a nice sharp crossover to the upside here, that would be a good sign. It's already in negative territory, so it has a lot of room to push up, and that could unwind our MAs in a bullish direction and could have that RSI making a run to over 70 and riding the price action up above it that way. So that's where I see the 3-month 2-hour chart for Alibaba. Let's flip it to the 5-day 5-minute chart for anyone who is looking to day trade or take shorter term swing trade positions. So here, obviously, there's like a big downtrend that it's stuck underneath that it needs to kind of work itself out of. Should be the first thing that I'd be looking for it to do. So it's kind of like lop a little bit of the top off of that. But first thing that I'd be looking for it to do would be to see if it can maintain its floor here. It's like pretty good support levels here and here and here. And then that gives it the potential to like flag out right about there. That could give us an opportunity. Flagouts are not my favorite. They're, to me, still like really unpredictable. Nothing like a channel in terms of like consistency. So it is still really a crapshoot. But if it can continue to build off of this floor that it has around that 225 price, then it might be able to push itself out and start making some higher lows. That'll be the first most important thing for us to see, as opposed to making a low here and then it looked like maybe it was going to make a higher low here, or even here, but then it got dragged back down. It started making lower lows and then continued making lower lows, and now it's made essentially the same low throughout the day today with this sort of sad face pattern that it made. So that'll be the first thing that I'll be looking for on the micro chart. And then in terms of like areas where I wouldn't want it to fall through, I think that's really just going to depend on like what's your risk level. Obviously this 222 or high 222s would be an obvious spot for it, if it's stretched down below this long candle here. But I would just kind of keep an eye on it. However tight you would want to keep it if you do have a position right now, or if you take one as a potential dip buy, I would just sort of line it up with how much capital are you willing to tie up or willing to risk while it stretches down toward a stop loss. I mean, hopefully it's not coming down anymore anyway. But if you do see the buy volume is really, really good in recent days, unfortunate thing is there's also some pretty solid sell volume, but that really died down yesterday, has continued to mostly die down today, actually, for the most part. And so I'll be looking for it to maybe wear off. I mean, we'll see what the MACD looks like in a few minutes anyway. On the upper side for potential price targets, this should be pretty solid zone 227. I don't know that anyone would want to take profit that quickly. I guess it would depend on your strategy. But, these would be, that's 229 zone looks really, really solid to me, as does this 230. So I think, having either of those in mind could make a lot of sense. If you wanted to give yourself a little bit more room to run and not be constrained by a very, very close price target. But this is where I'd be looking for it to get to in the next few days, 232, and then it would probably warrant a new look at the chart. But it basically has a bunch of stops at every dollar as it comes back up. But that's just kind of the nature of it being stuck under a downtrend. So to reverse the trend, it takes a lot of energy, a lot of momentum to reverse the trend. Or I guess I would have to build a lot of momentum to reverse the trend. And it does that through baby steps, unless there's some huge positive catalyst that comes to pass. So that's what I would be looking for in the days ahead. All right, let's look at our indicators. Let's kick things off with the MAs. So these are like relatively bunched together. Obviously the 12 and the 20 are moving. It's kind of like bobbing and weaving above and below pretty consistently. So it's just sort of like doing a bunch of interweaving. This is like a weaving pattern, which is just sort of like a close cousin or a sibling to bunching up. So I'd still look for it to start to unwind in some like obvious direction or another, don't know which, but see how it did its obvious unwinding here and then here, just to show you both directions in the same day. So there's that. The RSI also pretty low on the 5-minute, so it's doing a really good job here also of coming down to about oversold or into oversold and then heading back up to about overbought or overbought. Some folks, as opposed to putting 30 and 70 as their targets, do 60-40. So that's something to keep in mind. You could always adjust your RSI indicators to not highlight the 70 and 30 areas, but to highlight the 60 and 40 if you want to sort of move in and out more quickly. So there's the RSI. The MACD does have a slightly bullish crossover here, but now it's already curling back down toward the signal line. The bearish momentum is actually picking up. You see these dips are making lower dips, and the red area of the histogram under the zero line here, the baseline, is also getting deeper. So this had the opportunity for, to establish some bullish momentum, but then very quickly had equal to greater bearish momentum come in. So it's trying to make a little bit of a bullish push right now, but it's kind of quickly fading. So the MACD is not looking fantastic, in my opinion, which is unfortunate. But yeah, I guess we'll see if this like 225 floor holds. That will be kind of interesting to see as the days progress. But if it does, that could be a good sign. Could still kind of move sideways, which is mostly what it's doing here, right? It's sort of in this, what we had talked about, I think in last night's video with a different ticker, obviously, with this sort of like, it's still a channel, it's just a mostly sideways channel, but it's slightly bearish, but mostly just a consolidation channel. And it's just kind of walking itself down that way. So, you could continue to look at that as well, this slightly down consolidation channel, and look for it to retest and break out in the coming days, which would put you about 227, 228, something like that, depending on how many days it would take to form. All right, well, that is what I see with Alibaba. Good luck if you're in this one, or if you end up taking a position. I definitely wish you the best. I hope that you're having an okay week. I know it's been a choppy one, to euphemize it correctly. And but hang in there. Watch my video called "What to Trade When the Stock Market is Crashing." That title is kind of hyperbolic, but the essence of the video is on days when the market just turns against everybody and becomes very red, or even just mildly red, but the growth stocks and the newcomers kind of like get pounded the hardest. On days like that, that video will give you a simple strategy to sort of introduce some green and some profit into your account on days when the market is otherwise just beating everybody up. All right, well, the week is almost done. Let's finish it strong tomorrow. I wish you all the best, and I appreciate the watches and the likes and the shares. I will see you all in the next video.